Hi traders, welcome to this trade secret tutorial on time frame correlation. So there are multiple tradable time frames within forex, and this is basically because of the huge liquidity and the fact that the marketplace is pretty much always open bar weekends. So we're not restricted to the higher time frames. We can go all the way down, in fact. It's possible to go all the way down to ticks and 1 minute sort of time frame charts, but really the most popular tend to be 5 minutes, 15 minutes and 1 hour. Those tend to be the most favourite short-term periods, and then we can go up to 4 hour and daily and even weekly if you're so inclined. But really I think, in my experience, sort of 5, 1 hour, 4 hour and daily, they tend to be the main ones. So time frame correlation is really all about trading with the trend, but we do it at every time frame level for a maximum cumulative effect. So trading with the trend comes into play very much here, but it's about just trying to layer up the probability of the trade working. So let's do a little example here. So I've got a sort of fictitious setup here. I've got a strong uptrend on my daily, and we're just going to focus on those 4 bars there. So if I zoom in on those and take that to a 4 hour chart, so in effect this blue area here now becomes this blue area here, you can see we've got a number of bars within here. And you can see that even within a strong uptrend such as this, actually we have periods where it retraces. So, you know, we've got a step back here and a step back here. So we want to be going with the trend. We want to be trading long during these bits, not trading long when it's retracing, and then we want to be trading long with these particular parts. If we take it down another level and just sort of zoom in on this area and take it down to a 1 hour chart, then you get the same principle here. You know, we have periods of retracement and we have periods where it's going with the major flow, and typically speaking we would always find movements in the direction of the dominant trend, whether it be displayed on a 4 hour, on a daily, tend to deliver greater returns and bigger moves. So we don't want to be getting in when it's coming back here or trying to short it, for example, or trying to short it here. We want to be playing the long move in conjunction with the major moves on the higher time frames. That is the more successful approach to trading overall. So let's have a look at Euro Daily here. So Euro Daily showing pretty much the back half of last year and the beginning of this year. Strong moves, and I've isolated a couple of bars here during sort of the end of September of last year when we had a strong move up. So really, certainly if you were trading this on a daily setup, you'd be looking for long moves, long setups. You wouldn't be looking to try and short this. So let's now take that into a 4 hour, and I've highlighted those 2 days, and you can see obviously I've got more bars within that now. So, you know, there's a little retracement run here, but I wouldn't be trying to short this, because even on the 4 hour chart it's very clearly an uptrend. So I'd be looking to get long once I get price action. You can see we've got a little mini low test bar here, or perhaps I'd try and take it long on the break of that mini recent high, or maybe even on the break of that particular high. But the point is, the trend on this chart is up, and we wouldn't be looking to take shorts. And if we take it all the way down to a 1 hour chart for the same period, you can see here that, you know, we've got a reasonable sort of mini downtrend as part of retracement and some fairly bearish price action. You can see that's a big sort of bit of a high test bar, a bit of a bearish engulfing bar of sorts, not a perfect example. Might be tempting to take that short on the break of that resistance level. Indeed, it does break through, but actually it sort of fakes down, comes back, and then we fly again. So taking short setups here, not a good idea. Wait for setups back in the direction of the dominant trend. Now, the overall trend on the hourly chart is up as well, but you know, where you do have hourly charts where the trend is less conclusive, then you can rely quite successfully on the 4 hour and daily chart trends to give you the best clue as to which way you really want to be taking this trade. So in summary, look for a strong trend and always trade with the trend, certainly on the time frame you're studying. And if you don't have it clear on the time frame you're studying, then, you know, obviously look to higher time frames to give you that direction. If you're not clear what the trend is, you know, possibly you don't want to be trading it. If it's not clear, maybe you've answered your own question. Another technique that I sometimes use is just use moving averages or 2 moving averages to give you a sense of whether you have a trend or not, or a cross. If there isn't a good trend on the time frame you're looking at, do you really want to be trading it? So that really turns into point A. We're looking always for high probability trading setups, and those generally come where there is a strong trend. And then lastly, trading with the dominant higher time trend and to weight to lower time frame trades. And this is basically time frame correlation. Thanks very much.